Welcome to our weekly Forex forecast. As always, I need to remind you trading Forex is a risky endeavor and not suitable for all investors. My name is Jay Norris. I've written a couple of books on trading which were published by McGraw-Hill and which serve as a textbook for our courses. I'm also the Director of Education at Trading University, where I spend a considerable amount of time teaching and demonstrating the art of discretionary trading in live markets. Hey, let's get to the charts. First market we're covering is the Australian US dollar. You could see on this chart your primary pattern's up. Let me show that to you. Primary pattern's up, secondary pattern up, even your day-to-day is up. However, it looks like we're in the middle of a correction. You can see the market rolled over. Let's look at that on a 4-hour chart. And you can see potentially you're in an area of a correction, more reactive trade. We'll have to see. Wouldn't mind seeing price come down to here. Or, if I peel out to that daily again, down here looked to be a pretty attractive level also. Not sure if that's wishful thinking or not, but let's see if this short-term correction will lead to more downside. Pull out, we can pan out to the weekly chart and you see the big picture, and there's no other way to look at this past year's trade other than it's supportive of the uptrend. So that's pretty bullish. Essentially had some nice impulsive moves up, and now you're more or less in normal corrective trade here overall. So that's how we view the Aussie for right now. Let's see how it plays out on the shorter term time frames going into the fall. You have some pretty interesting seasonals overall. Long term, very bearish seasonal for the US dollar, but short term, very bearish seasonal for the U.S. stock market also. And as many of us know, the stock market and the dollar have been going in opposite directions. So one of those markets is going to win out, and we'll see which one it is. For now, though, you can see where we have cautious trade here in the Aussie. Next market, Euro U.S. dollar. Euro is one where we definitely like this area overall. For sell setups now, you're starting to see it roll over intraday also. There you can see some higher prices were rejected on Friday, and it's little hints like that, little tells like that we keep an eye on. You still have your shorter term patterns up. Heck, you even have the secondary pattern up. That's a pretty powerful pattern. On the other hand, you're approaching primary pattern structure. One of those higher time frames, such as the primary, when they're most influential, is when you're near primary pattern structure, so you're getting pretty close to it. You're getting up in an area now also here where you saw you had a pretty good sell signal coming out of there. So that's a somewhat lofty level for the year where we find this market at right now. So we're more interested in looking for sell setups in line with that longer time frame primary pattern now. Next market, pound dollar. Pound been very tough, very strong market. On the other hand, it really went from normal to an accelerated trend to almost an exhaustive trend here as far as pattern direction. Heck of a breakout, though, overall on the weekly. You look at it, it looks great. Hey, we'd be interested in looking for a dip in this market to potentially position ourselves along with this overall pattern that we see on the weekly. Nice uptrend here to accelerate. We wouldn't mind seeing a correction. Keep in mind, big rallies lead to big retracements, so that's something to keep an eye on. Pretty good momentum on our MACD on that weekly breaking out of there also, but it looks like it's a bit overextended on the daily. Here's a guy where we wouldn't mind seeing a sizable correction lower to perhaps get ourselves positioned long, which ideally would benefit from that bearish dollar seasonal we see going into the fourth quarter. Next market, dollar chief. I think the only way to look at this market is there's still a lot of room down below. Sure, you're hung up on some intermediate term support here. Wouldn't mind seeing a rally also right here to get positioned in the direction of this new secondary pattern also. But I think you have pretty good room either way here, meaning I think you could benefit from selling a rally. But at the same time, there's a lot of room down below here, all the way down to just above 90. You have support there. Dollar CAD. This is really not a market that we're following that closely. I think there's some more downside here. When you pull out to a weekly, you could see this market maybe in a position to challenge. Well, I think this market's in a position to challenge potentially 95, possibly even get down around 93 or so, down to these levels that we saw at the end of 2007. Yeah, I just don't see anything to stop the Canadian dollar from strengthening right now. It's a healthy downtrend on that weekly, very definitely on that daily. And that's that. You have a pretty good move here. Shorter term, yes, you do have the potential for a correction here, but from my perspective, it's just going to put that market back in line with higher time frame structure to try to tee off for traders to kind of tee off on another sell signal up in here, perhaps in line with that overall trend. It's just not a market we have a whole lot of interest in right now. Dollar yen. Dollar yen's another one where, honestly, I know there's a ton of players long in this market, and I think long term that, well, from a historic perspective, I think there's a good possibility that you could see a historical bottom putting in somewhere in these same levels that we saw trade at the last 2 years, but I just don't see it happening yet. And from my perspective, the dollar yen's, they still call it the widow maker, and it's just a tough market to try to get long on. So the trend is my friend. I'm going to stay away from this for now. Last market, we'll cover the U.S. stock market. The U.S. stock market is such an influential market. Essentially, it's your alpha market. All these currencies are very highly correlated to it. Bullish pattern, no doubt about it. Primary up, secondary up, even the day-to-day is up. However, you're running into some potential resistance just ahead. You can see on the weekly chart. That's a significant level because that was where you had that head and shoulder top in 07, and that's right where it turned right there. The market will remember that level. Markets have memories for sure. That was a pretty significant level. The fact that you're coming all the way back to that is significant. And also this same level represents the GAN 875 line. You take this entire market and you measure that up, you're going to see that a 0.875 retracement 0.875 level. So that's a couple different levels there, a GAN level, and also it gave that beautiful pristine sell setup way back when. So that's a market that's a level the market will remember. Also, you have a pretty powerful seasonal this time of the year from mid-September, right about where we're at now, actually the third week in September. From mid-September through late October, you have a pretty good seasonal down in this market. So let's see if that comes to pass. Perhaps we would get a correction somewhat like that into October. We'll have to see. Right now, though, the patterns are still strong. Your alpha market's still up, and it's still looking good. As I said, my name is Jay Norris. I'm the Director of Education at Trading University. If you want to come and see what we're doing at trading-u.com, come on the site and click the education button there and see what kind of freebies we have as far as demoing our live market analysis sessions every Monday and Friday, and then signing up for a free copy of our first two modules of our Core Concepts course. That's free. You can come and demo that too. Thank you so much, and we'll catch up with you for our midweek report.